as of right now, what are you thinking for 2023?
So this goes back to what I just said a few moments ago about understanding where the Fed is. And so it also goes into tuning out the noise from anybody else's views and opinions, because we only have one Fed. We only have one Fed chairman, and that's Jay Powell. And we don't have anybody else making policy outside of the Federal Reserve Open Market Committee, right? So it doesn't really much matter what the data is telling us if the Fed is interpreting it their own way. No, but let me step back. I don't really mean that we should ignore the data. That's absolutely not true. We got to pay attention to what the data is, try and piece it together, the roadmap to where we think monetary policy is going to go. Yet the Fed has a certain way of interpreting the data, and if we're not in tune and in line with how they're interpreting it and how they're using it to craft policy, then we're always going to be one step behind the Fed. Now, for years and years, they've been accused of being too slow, dragging their feet, have more lip service than action, and that's a fair criticism. And I think by and large, I've heard some of the Fed governors actually admit to that and say, look, what, we were slow. I mean, look at what happened. Look, Rosanna, look what happened last year. What did Chair Powell say? Oh, inflation is transitory. He was wrong. He was 100% completely wrong. I don't know. I don't know exactly if he said those words that I'm wrong, but he said he came about very, very, very close to saying that. So so that being the case, listen, you have to, when you have to say again that mea culpa out there, and you say, look, you know what, I blew it. Then you have to take some action and see what the problem is. And this is an inflation serious problem. And if it doesn't get arrested and corrected, it's going to hammer our economy for a long time. Because we're an economy based on a fiat currency, right? The dollar, U.S. dollar, like a lot of other economies have their own currencies as well. So it's based on paper, and it's based on faith that the government will pay you back, right? It's not based on hard assets like the dollar or like gold or silver, right? So unfortunately, when we run into problems over the past 100 years since the Federal Reserve has been around, there's only been one way to get yourself out of a problem. That has been printing. You got to print more money, right? So that causes inflation. What is the definition of inflation? Too many dollars chasing too few goods, right? So when you have a lot of dollars chasing after those goods, you see prices start rising, and they stay up there. They stay sticky. Look, listen, you know what? Chipotle burritos went from about $10.50 to $11 up to about $14, right? And so if we do suddenly, Rosanna, get inflation starting to come down, do you think Chipotle's going to go back to $10.50 to $11 on a burrito? Probably not, right? They're going to keep those prices up there. So that's what they call sticky inflation. So we're going to have a lot of that going on. So getting back to the original question, I think it's important to understand where policy is, and recognize that the Federal Reserve is interpreting the data a certain way. And what we should do is be aligned with the Fed and say, look, you know what, we can cry and scream all we want and say, hey, Federal Reserve, can't you see it? These inflation numbers are coming down. They're doing it. I mean, maybe they are, maybe they're not. I don't quite see it personally, but there's a lot of people who are looking at the data and they're showing me charts that say, can't you see it? It's going from top here to that. I mean, again, I don't really quite see it when I go shopping, but you know what? Maybe they're right. The Fed isn't seeing it that way. So you know what? The Fed isn't seeing it that way. We're going to have higher interest rates for a lot longer. And that's what they said last meeting. Higher for longer, and maybe even sooner, and maybe even faster, right?
Absolutely. Perfectly said. For me, I've been listening to Powell speak, and to me, it's the same tone as last summer when I heard him talk about data dependence. When I heard that, I was like, oh, well, the data to me, when I analyze the CPI and I see it's rising month over month, it's not good. And so I think they have to maintain a restrictive monetary policy, and they will continue. So whatever the markets are trying to price in or say, the swaps market, they always revise anyways, and they'll adjust and they'll change. Look how they changed from January to February, and they will change again. So like you said perfectly, eliminate the noise and just
That's right.
try to focus on what's most important, who's creating the monetary policy. We know at the Fed, and just listen to what their message is. And we see the data. And, I like to mention Deutsche Bank. They did say, it was a great quote. They said, once inflation goes over 5%, it can take up to a decade to come back down. So it takes time. And we know, right? And we know from the 70s and 80s, knowing our history, we know it takes time. So agree with you on that. Thank you so much, Bob, for those great points. I like to say the only certainty is uncertainty, because we certainly have a lot of uncertainty and a lot of moving parts that keep moving amidst us. So all we can do is just focus on the data, like you said, focus on and price at the end of the day with trading.